Energy Markets podcast, Wednesday, September 1st. It feels like, in some ways, the categoric first day at school, even though we've been engaged for some weeks, and August is pretty important and pretty turbulent. But here we are, 1st of September, when things really get moving. It is the day of the OPEC meeting to decide on output supply going forward. Let's kick off from our man on the ground in the eye of the storm, so to speak, Randall Mohammed, former VP, Energy Solutions, Ahart Solutions International. It's not quite the CNN correspondent standing sideways being blown over by the wind, but we'll take a buttoned up and bedroom version. Randall, has Ida passed? Is it no longer a factor for the oil markets?
Yeah. Hi. Good morning, Sean. Good morning, everyone. Yeah. Look, that storm has basically fizzled out. So right now, the task right now is damage assessment and recovery. My understanding is that up to 2.3 million barrels per day of refining capacity, and about 1.7 million barrels of oil production have been shut. Because of those storms, 288 rigs have been evacuated. And of course, the power outages, the flood waters, and there's some wind damage to the refineries. So look, it's going to take, several weeks, Sean, to recover those operations. If you remember the storm that came through last year, just about the same time, the recovery effort was, basically between 4 and 8 weeks to get those operations restarted. So I think, we have to wait till those flood waters reside so people can get to these sites. And of course, power is a big concern. We lost several hundreds, if not 1,000 kilometers of transmission and distribution facilities.
So inevitably, all of that takes time. Let's leapfrog across 12-hour time zones and land in Singapore, where everything is locked up. Vandana Hari, founder and CEO of Vanda Insights. After putting together the Daily Digest today, Vandana, I was just reviewing it, and it's, oh my God, this is a really glass half full, if not 3/4 full digest. Everything was pointing upward, including China's oil demand recovery, which was making the headlines. Your reading of the markets today, Vandana, which are up on the open in Asia this morning.
Yeah, sure. Thank you, Sean. Great to be back on your show. Good afternoon to everyone from Singapore. It does seem that Chinese appetite is recovering. I think it's important to bear in mind that they have indeed managed to squash, rather miraculously, some would think, the outbreaks. So the outbreaks that began around the 20th of July, just to recall, and had spread very quickly across more than half the provinces of the country, and had resulted in quite a lot of severe, sweeping curbs on travel. Essentially all sorts of non-essential movement of people, quarantines and whatnot. So we saw Chinese oil consumption. We even saw refining rates pulled back quite a bit throughout August. And now that refiners are getting ready to buy again for October and even November in the case of China. And also something else we saw in August, and of course, the first half of this year's story has been the independent refiners being under a bit of pressure. There's been increased regulatory scrutiny. They have not been given as much of import quotas as last year. That seems to be easing a little bit as well. So mid-August, in the midst of all this China curbs and restrictions and what have you, the government actually came out with a third batch of import quotas. And, these refiners account for nearly a fifth of Chinese crude imports. So things are looking up indeed, as you say. Chinese appetite is recovering. But I think the bigger picture for me on China, and of course we had some macroeconomic data yesterday, PMIs for manufacturing not looking too good, in deceleration. Services sector actually fell back into contraction mode in August. So I think the big picture for me on China is it's recovering. It'll probably getting back on track, but we shouldn't expect last year's or the second half of last year's kind of runaway growth rates in that country.
Let's welcome Ahmed Mehdi, Research Associate, the Oxford Institute for Energy Studies, back to the table. Ahmed, it is the day in which the OPEC ministers will sit around the virtual table still at 3 o'clock UK time, I believe. Your thoughts on what OPEC will be facing as they decide what to do next?
Good morning, Sean. Yeah, thank you very much. I would say that it's just to take a step back. I agree with Vandana. Actually, China was very much the story, and also obviously the issues where a lot of banks and credible agencies were revising their demand estimates. But I think fundamentally, when we look at decision making with an OPEC, it seems very likely that they will continue with their 400 kbd increase. Whilst there was a wobble in August, at the end of the day, China. We had a lot of pressure on Middle East crudes appearing in the last trading cycle, and a lot of spot premiums that for grades that were entering China, particularly crudes purchased by the independent refiners, because they were very much sidelined from the spot market, they came under pressure. However, it's important to remember, India has very much come back since early this year, Japan as well. And so whilst, we're starting to see that pressure, at the end of the day, the Asian spot market, is actually gearing up for another healthy cycle. Also, inventories are continuing to draw and prices are above 70, obviously with what's happening with the seasonal issues with the, US hurricane season. So I think the issue is not so much when we're talking about OPEC strategy. I don't think the question is will they or will they not today. I think it looks very much certain that they will, and that's being priced in. I think it's more to do with 2022 and the challenges there. I would say that if they were not to, that would also be complicating some of the internal politics as well, which is obviously people have their eye on. So it would be messy if they were to fray away from an increase. One final point is about quotas, is that most of those with spare capacity have actually been accommodated for since that last meeting. So when we look at other countries who aren't able to achieve their quotas, I'm thinking here of West African producers, or even and also some of the challenges with investment in the upstream. That's another factor to take to bear in mind, and also the US as well, where despite the fact that rig count has increased, we're still talking about a US production rate which is still 2 million barrels lower than pre-COVID.
And 2 million barrels even lower than that this week with the Ida storm. But Randall, we did see yesterday, and we'll expect it to be affirmed by the EIA today, the larger than expected draw on US inventories, oil inventories, down by over 3 million barrels of crude oil, actually 4 million barrels. Now, this was before the storm hit these numbers, and so we have to see what the impact of the storm is. But we had the OPEC report as well yesterday saying that they expect the draw to continue right through to the end of the year. We're going to see falling inventories. What is your outlook for the impact of this storm and inventories in general going forward?
Yeah, Sean. So, as you correctly said, the Gulf of Mexico, produces upwards of, 1.8 million barrels of oil per day. So that makes up around 13 or 14% of total US production. And a lot of that has now gone offline. So which means, of course, we got to draw down on those inventories, yeah? So, I expect to see more drawdown on those inventories as we go forward, because it's going to take a couple of weeks well before we can bring that production back online. And, as Ahmed pointed out, despite the increase in oil prices, US production really has not moved. It has moved incrementally from 11 million to 11.2 million barrels per day. And that is largely because of the reduction in drilled but uncompleted wells. So there's been a significant drawdown on those DUCs. I think upwards of 5,000 DUCs have been drawn down out of that inventory. So that's where you're getting that incremental production. So I think, OPEC is definitely going to weigh in on US production and where US production intends to go, for the rest of the year and of course into the new year. My forecast is that US production is not really going to increase by very much as some analysts may expect because of the higher prices. I think producers are still bent on maintaining cost discipline, retaining shareholder capital, and they've done a good job thus far. I mentioned in your last program, something like $30 billion in free cash flow, from US producers. So look, they've done a good job. I think that you'll see that continue throughout the fourth quarter and into the new year.
Very profitable period for oil majors who aren't spending any money really on big new projects and are making a lot on the oil price recovery. Vandana, the issue of the August wobble was kind of dictated by two things. One, the Fed to taper or not to taper, and ultimately they backed away from that. The other, as you mentioned, was the China and the whole challenge of Delta. It seems like in some ways both are behind us now. Is Delta, the COVID variant Delta, as a threat to oil markets, something in the past?
And that is indeed a very key question that perhaps OPEC plus ministers should also be asking themselves today, because in a way they would be looking in the rear view mirror if they were to say that, oh, look what happened to demand because of Delta, and as a result, perhaps we should suspend the monthly supply boost that's been planned. I would agree with you, Sean. I think it is very much behind us. If you look at the Delta wave on a global basis, and I follow the Johns Hopkins University figures, I quite like the way they collect and present their data. If you just look at the curve, it's quite obvious that from around mid-August, some would say even a little bit earlier, from second week of August or so, it's very much a plateau. So the curve sort of started to soften at the start of August, and it's in a very plateau phase since then. So I think perhaps US is the only exception now, because it still looks like an upward, and Randall might be looking at this more closely, but it still looks like a sort of a very steep upward track of cases. But the important thing to my mind, especially for oil market watchers to keep in mind, is that the main worry, of course, was the Fed taper and all of that, which is subsided for now. It will come back, I think. But the other worry was that the world's two largest oil consumers, US and China, were being hit by the Delta wave at the same time. Now, of course, I don't use the word wave with regard to China, because the highest cases they ever had on a daily basis was all of 143 in a population of 1.4 billion. But nonetheless, I think
at least they're the ones they told us about. But nonetheless, yes, okay, small numbers.
But the important thing is that the restrictions were in place. Oil demand did go down. But the interesting thing about US is, now the US has had this Delta wave since pretty much, I think, the start of July, right? But they haven't gone back on the most stringent of restrictions that we saw in the US. It's not lockdown, it's like stay at home or shelter in place or whatever, and curbs on and not allowing non-essential businesses to open. They haven't done it. So to my mind, this wave or the next wave, I think it's almost become immaterial now, to my mind, how much, and the vaccination rates are pretty high. I think 60% of the population is already vaccinated. So to my mind, yes, I mean, a long-winded way of answering your question, that I think, yes, Delta wave is very much behind us. I think the question is, will there be new waves and, from new variants? And I think, yes, that remains a possibility. But for OPEC Plus to react because of that now, and especially given that they are their own technical committee people are saying that this year and right until next May, the world is going to remain in a deficit, I think it would be overreacting and probably not good optics for them either at this stage.
Ahmed, we also have the Iran nuclear talks. It's sort of like the story that won't go away or won't progress. We had the comments overnight by the Iranians indicating that they would not be rejoining these talks perhaps for another few months. I welcome your views on that. Inevitably, earlier in the year, the Iran nuclear talks pre-summer were seen as a big factor for the oil markets. Now it seems far away. Your thoughts on the outcome there?
Yeah, there's a few so it's an interesting question. A few points. One is, going back to the OPEC Plus dynamics. One of the factors that I forgot to mention was the inbuilt flexibility of what was agreed. In terms of the actual roadmap ahead, this is very much a roadmap. So there is flexibility, including that 3 months, and part of that is to do with Iran and those with the production capacity looking to negotiate their quotas like the UAE did, and that's all good and well. A lot of that was to do with when, apart from the fact that you have this spare capacity, also to do with when, one of the big questions I suppose in the market was, you're right, was to do with Iran. When will they come back? I think what's interesting is there's a mixed view. On the one hand, this is a negotiating team that is more aligned with the supreme leader. Effectively, that reformist conservative tension has slightly moved away because effectively this will be the last president Iran overseen by, most likely to be overseen by Khamenei. So in many ways, one could argue that there's a sort of paradoxical situation that it's more likely that there will be a deal under this administration, particularly given the economic challenges right now. So I think if you just look at this purely from a lens of what are the economic challenges that would likely bring Iran to the table, I think they are really multiplying month on month. I think from the energy sector perspective, it's not so much about looking at concealed crude flows, which obviously has been the news, where storage builds because of the clampdown on, say, Chinese independence, and so and Venezuelan, Iranian crude on storage in Singapore, etc. I think the issue is more to do with the condensate balance in Iran has to be managed in order for Iran to keep all of those other parts of the system running. That includes gas, avoiding fuel switching in the power sector, and also maintaining the product exports. And I think that there is a problem at the moment with storage, condensate storage, just in terms of where that limit is going to be reached. And so that could be one indicator of when a timetable might be there. But also, on the other hand, you have others who are, in the Middle East saying, well, actually, this is the new negotiating team is quite inexperienced. The foreign minister made a number of gaffes in Iraq during the regional security conference, didn't really understand diplomatic protocol, that really the Iranians are actually interested in the deal, but a lot of this is just very much posturing and trying to extract a concession from. So the Iranians have always been in that position of optics. It's always been important to them. So
their ability to drag out negotiations is historical. The original nuclear talks took 3 to 4 years to finally to get to the JCPOA, and now it might be.
I think that the economic pressure, and as I mentioned, the pressure on the energy system, as we saw as well during the summer, where we saw really serious problems with the power sector, have reached a very serious situation. So in my view, I believe that the towards the first quarter of next year is more at least the beginnings of a deal will start to take form, whether that's in the form of waivers or what have you. But I think it is quite unsustainable for the Iranians.
Or the other could happen, which seems to be happening, is the Americans sort of tighten their muscle on restricting sort of illegal exports, and Chinese holding back from taking more. So clearly, this is something to still watch, but not as red hot as before. Let's go to the survey question and get the room's view on the theme I was putting to Vandana earlier. The COVID Delta variant is a bit like the storm Ida. It has blown like a bad storm, but it has now passed by as far as being a real threat to demand destruction and oil prices. Do you agree with that thesis or disagree? Welcome your thoughts on that. Randall, a big part of the answer to that question, I suppose, is America, China certainly, and we had that insight earlier. We saw, and we're carrying the story in our digest, the KPMG survey, that CEOs are back to pre-pandemic levels of confidence. Meanwhile, there's over 100,000 infections a day in the US. How do these two things coexist going forward into September and the start of the new season, if you like?
Right. So yeah, Sean, look, I mean, I can certainly speak for Florida, where the infection rates are extremely high. In fact, I was talking to my aunt, who is a nurse at one of the hospitals in Miami, and she's saying that, because of the overwhelming demand for hospitalization, they are now converting part of the cafeteria and the gym into ICUs. So look, that really paints a very gloomy picture of the virus spread in Florida itself. And 99.9%, Sean, of the hospitalization is the unvaccinated folks. So, again.
And Florida, of course, is a state in which the governor has mandated, it's against the law to require people to wear masks at school or in indoor settings, right?
Absolutely. Governor DeSantis came out with this mandate, and he threatened to withhold salaries of teachers or boards that refused this mandate. But the judge has overturned that.
Oh, he has. Okay.
He does, yes. DeSantis was not a happy camper, but nevertheless, the judge has overturned it, and the judge has says, "Look, guys, the schools have the right to protect themselves and the students. Because Sean, this falls into the category of safety and health, and just like a private business, you have the authority to protect your environment." And that was basically what the judge argued against. I think DeSantis is going to appeal it. I don't think he's going to be successful because a lot of the parents are pushing for the mask mandate. Of course, schools have opened back up. People are back in school. In fact, my son was complaining he can't even get a parking spot at the university. So, obviously the mobility is there. People are, in their cars, which is a good sign for oil demand. But look, I think we still have a long way to go, Sean, in terms of vaccination. I think the US nationally is around 56%. We're nowhere near that 70% that President Biden wanted to get to. But
there's still a big appetite to push through these federal spending bills.
Oh, yeah. Look, that 1.2 trillion infrastructure deal, I think, is going to go through. You have that 3.5 trillion deal as well, which I think will go through. And, it was no surprise to me that Powell was quite dovish at Jackson Hole. Obviously, he gave no date when the tapering will occur. He didn't give any quantum in terms of how much they're going to pull back by. So obviously, his strategy is basically reducing the unemployment and trying to maintain a growth trajectory. But obviously, the investors have reacted positively. you see where the S&P 500 has gone to and will continue to go once, they maintain that sort of slack monetary policy. There's a lot of money sloshing around, Sean, in the economy. Economists believe that.
No wonder why KPMG survey is so positive when the Fed is still doing $120 billion of asset acquisition every month into economy that's supposedly growing at 8 to 10%. It just strikes me as incredible. Of course, there's still some unemployed from the crash, but it's all a bit, and it's not going to stop. So that's clear. Let's go back to Asia, to Vandana, to get some thoughts of the wider look in Asia. Clearly, China has found its mojo again. At least the data is pointing to that, Vandana. But what about the rest of Asia? OPEC Plus does look to the whole of Asia for incremental demand growth. Are they going to get it anytime soon from the rest of Asia, non-China?
Yeah, so let's cast our eye quickly across the region. Obviously, the second biggest consumer and third on a global level, India, is quite, again, also back on the recovery track. The worst of India's Delta wave impact was through May. The worst of India's lockdowns and the state-wise close to lockdowns and contraction in oil demand was also in May. And we see quite a bounce back already in June, which continued in July and August. As things stand today, Indian demand, oil demand, about 4.3 million barrels per day, give or take, is about roughly 95% of the same period in 2019. I prefer to compare with 2019, of course. So that's looking good. If you look at Japan and Korea, the third and fourth largest in this region in terms of oil consumption, things are going, neither has emerged completely out of COVID. Japan continues with its emergency measures. So I would say Japan is just more of the same, pretty much pre-Olympics, post-Olympics. Korea seems to be things seem to be looking up. They have a little bit better than Japan. If you look at Southeast Asia, now that's also as a region, also a major demand growth center. It's mixed. The picture is mixed. Indonesia has certainly also come off. It's the worst wave. Malaysia, unfortunately, is still continuing. Malaysia had 2 months of lockdown, and they are still struggling with it. Vietnam, Thailand, not so bad. So basically, just as we would expect from a wave, the worst in Southeast Asia was through, I would say, June, July, and it is starting to come off. So if OPEC were to sit back and take like a big picture of Asia, look at what's happening in China, India, Japan, Korea, Southeast Asia, I think the sum of that picture would be that things are back on the track. One shouldn't expect, kind of a strong rebound, nothing like what happened in the US with the summer reopening or even in Europe, but, sort of steady as she goes, a steady continuing.
It certainly would be, it strikes me, in OPEC's interest to take a few of the $1 billion they're making on the oil price and buy as many vaccines as possible and send them to everybody in Asia, because you still have a vulnerability there, Ahmed, of a low vaccination rate. Let's get the survey result to give Ahmed the last word, particularly interested on your views on the Iraqi elections. Has Delta blown its storm? The answer is yes, agree, 71%. It's a story of yesterday for the oil markets. Ahmed, your sort of closing thoughts and the Iraqi election, is it a big deal? Should we be paying attention?
So just closing thoughts, as you said, I think Vandana provided a good summary on Asia, which is very much closely monitored by OPEC. I would say that India really, India, as we mentioned, has come back. China, I think, is the interesting question is what will happen with the next batch of import quotas and whether or not that reflects a new trend. I think also we're seeing a number of one thing we haven't discussed is actually what's happening on the product side as well, because one of the things that has been happening in the last several weeks as well has been some pressure on product cracks, but also we're starting to see outflows of or of arbitrage opening between Asia to Europe. So that trend of 2020 being very much driven by strategic buying by China, now is actually more now the actual interesting developments in the market is looking at what's happening on crude versus products with a different slate, with west of Suez versus east of Suez. On Iraq, very briefly, because I know we're ending, I think the interesting things that's happened in the last week or two has been the return of Muqtada al-Sadr to the electoral scene. I don't think anyone really believed when he said he would be withdrawing from the electoral race, since he is very much the kingmaker of Iraqi politics. But in fact, it was a very cynical ploy to extract concessions from different groups within the country, particularly Iranian-backed groups, as well as other coalitions, whether that's who make up Iran. I think the point is that this is not going to be the election that the protesters have asked for. So we very much are likely to see continued or even worsening protests, because there will be a deal done between the key parties, that is Muqtada al-Sadr's Sairun bloc and Al-Amari's wing as well. The question then for the oil sector, no impact on production or what have you. I think it's more the micro politics with what's happening at the moment with IOCs in Iraq. The oil minister has been trying to shuffle himself as head of a new body that would perhaps be permanently staying there, INOC, whether that actually emerges as a new national oil company of Iraq. In terms of the actual IOCs, there's been a lot happening. We don't have time to go through it, but effectively, Total are interested in developing a deal. How they want it done by the end of September. How likely that is, before the election start, how likely that is difficult to say.
It's clearly that there is a lot of movement in those IOC's concessions. Yeah. We need to wrap it up there. Yeah. I would say we have a very passionate interview this week with our regular commentator, Laurie Hitayan, on all things Lebanon, which is clearly a story of great sadness in many ways for all the Lebanese, obviously, and for all of us who love Lebanon. But anyway, it's a powerful interview if you have a chance over the next few days to listen to. As regards the OPEC meeting today, what I think will be interesting, a bit like a Fed meeting, is not the decision, which is pretty clear, but the commentary around the sides. What do they say in the minutes? What do the comments say about what's coming ahead? That might be useful and worth paying attention to. Randall, thank you so much for joining us from Florida. Vandana, as always, from Singapore. Ahmed from London, appreciate you getting up early this September 1st morning. And we'll see everybody tomorrow, same time, for the last show of the week, where we'll sort of digest the OPEC meeting. All the best. Have a good day. Thank you.